Yeah, I'm still losing and I'm struggling at the moment. I feel like I'm doing all these things to try and improve and it's not really paying off. And one thing I noticed this week from someone who I would classify as a friend, his name's Nathan. He joins the live almost every single night and he's really nice. And you know what? Something that I love about his characteristic that I'm noticing is he is flexible with his trading. What I mean by that is the other night he said, with all the news going on at the moment and how erratic the market is, I decided to take profit there because it was a 5-minute resistance and price wasn't looking right. So I just took profit because price hasn't been moving, larger directions, I guess is what you could call it. And it's been more erratic. And it really caused me this week to look at my trading. Now, it's only going to be 1 week today, which was 4 days of trading. And the reason why that will be the only trades that I'm looking at is because I'm going on holiday soon. And it's so important to look at your trades soon after you've done them so you can understand what maybe you could improve on. So that's why I'm doing the week here for you guys rather than waiting for a fortnight, because I'm going to be away for almost 2 months. So because of that, I really want to make sure that I do this now before I go to kind of close off this chapter, and hopefully I come back nice and refreshed. So with that being said, I'm going to do like a quick fire, and we're actually going to look at most trades through this week. And really, I just want to show you what I mean by being flexible with my trades, because we're taught as novice traders to be super fixed when it comes to how we look at the chart, how we enter our trades. And the problem is the charts aren't fixed. Your strategy isn't fixed. And sentiment isn't fixed. Nothing is fixed about the market. And I think flexibility is the way to approach the market. The problem with that is that flexibility is hard to do. We don't like change as human beings. We like routine. We like to know what to do, when to do it, and not to have to be flexible, because that brings in uncertainty, right? And I honestly think that this could be the biggest thing, that if I understand how to deal with and understand how to get better at, instead of being focused like a horse with blinders on when I look at the chart, I will have my peripheral vision and my view of the market is going to widen. And I think it'll give me a better general look at the market and be able to be pickier with my trades and really just understand the charts on a whole nother level. So that's why I want to kind of go through my trades and show you where that I may have failed at this week. Because my one target this week was to take A+ setups, and I felt I did that okay. The second target was to set a stop loss, set a TP, and don't touch it. Okay? And my stop loss is below the 30-minute low or zone, and TP is at 30-minute zone. Don't touch it, right? Just to give a bit of perspective. The first day, there was actually no trades up until the last 15 minutes of my trading session. We had a valid 30-minute zone, okay? The reason it was valid, just to explain, was because this move broke this 30-minute high and continued upwards with strong momentum, right? So this is a zone. As you can see, right at the beginning of my session, we actually tested the zone and we moved up, I would say with decent strength on the 5-minute chart, but we consolidated. Now, my theory behind this trade was, okay, we had a decent move up. We've come back and retouched it. We've just got consolidation. Maybe we'll come back and retest it and do a bit of a second leg upwards, right? And we're in quite a bullish move, by the way. What I didn't take into consideration, I don't really trade trend lines, but again, I think the story here is that as we come to the chart as traders, we have a tool belt. We've got a spanner, we've got a hammer, we've got all these different, we've got a screwdriver, we've got all these different tools. And we just need to understand, why would you just use one tool if you can use all of them to get a great idea or an outcome? And that's what I'm starting to realize with my trading is, I could have drawn up a trend line here. Okay, we may have actually broke this trend line here on the 30-minute. Okay, maybe I should be more cautious about this. That does not take much effort, right? That does not add more confusion. It just makes you wary, right? Okay, so could have thought about that. But the biggest thing for me here was price action. In hindsight, I'm looking at price action and I'm going, well, we had a big push up, decent volume, and also like a decent push. It looks strong, right? But then this next move completely removed that move, which means, yeah, we might have had strong bullish momentum, but we had enough bearish momentum from that move to completely take out. And that's like a V, right? What do most people do on a V? They enter here, right? For the downside. But I wasn't thinking about that. I was thinking, okay, we have a trade here. That's all I was looking at. Okay, yeah, I've got my 30-minute level. Okay, yeah, we've got a bit of bullishness on the 5-minute. We could see a move up here. Okay, the 30-minute is coming back down, but, we had a huge wick down here. So it's still kind of bullish in my eyes. And just not just narrowing in on your setup rather than looking at the broader picture. We had everything as per our setup, but we need to be broader. We need to use our whole toolkit to understand a broader spectrum of the market before we then apply our strategy. Regardless of your checklist, regardless of your strategy, you need to understand the market from a broader perspective. And that's what I'm starting to realize as a novice trader, that I haven't made much, I guess, growth, I would say, in my eyes from a P&L perspective because of this. And I know that because if you looked at the last recap and I did my reports and looked at what in hindsight trades shouldn't have been because of either price action or a valid level, I would be profitable if I wasn't taking those silly trades. So I need to be more understanding of the broader sentiment and technicals of the market. Let's take a look at this trade the next day. So I had a valid 30-minute level, okay? Nice 30-minute level here. Come down, we had 1 leg, 2 leg on the 5-minute. We had a peak of volume. Let me just zoom that up so you guys can see. We had a peak of volume coming down on the red candle. We had buyers step in on the tape. I've entered stop loss below. Now, this was the trade that Nathan was in, and we were both long on this trade, except I was originally aiming for the 30-minute high, which was up here. Okay, so that's where I was originally aiming because that was my strategy. Okay, now here is where I could have judged this trade differently and looked at perspective, because at the end of the day, from a larger time frame as well, everything lined up. We had if you just quickly draw a trend line there, you can see we broke that trend line, came down for a retest. Okay, great, we had that too. So we have all these things that are looking quite nice in terms of the strategy. So what could we have done to not be so fixed and just allow this trade where I was up over $200 at one point? Let's actually see how much I was up. Okay, highest peak was $192 on this trade. Okay, I might not have gotten that out of the trade, but how could I have maximized my profits in this trade and not just let it go completely against me? And being able to be flexible in this trade, because Nathan actually got out here. And I was like, oh, do you target the 5-minute highs? And he's like, yeah, sometimes, depends on what price action is doing. Price has been erratic lately, so I don't like to hold trades too long. Oh, okay. So when I looked at this trade after that session, I was like, okay, if I was targeting the 30-minute high here, what should I have expected price to do? A push up, okay, you probably expect a little bit of resistance at this 5-minute level of resistance, but what I would have expected was a leg 1 down, high 2, and then a continuation. But on this continuation, if we actually zoom up here on the continuation, on that particular candle, we actually had a peak of volume at the resistance level. Okay, if I was watching at this point in time, instead of setting and forgetting, I could have been like, hang on, we're struggling to even make a new high after a high 1, high 2 on the setup. We're at a 5-minute level. Price action hasn't loved to move in long directions much lately, and it's been very erratic. Is this a possible time to exit? After seeing buyers be absorbed here and then sellers come in, I realistically should have been like, exit, because at that point, that should have been a breakout moment. And it wasn't. Sellers started to take control again. Yeah, okay, maybe even if I exited a little bit later, I still would have got maybe 3R, 2R, 2.8R out of that trade if I was flexible. And I think I'm starting to realize why 95% of traders fail. It's not because of a setup. It's because we're not flexible enough to maximize on that setup. And I think the hardest thing with what I'm talking about here is sometimes maybe I would have exited there and it went my way. But at least we got 3R out of the trade, right? Here's another one. Okay, everything looked right. We had a valid 30-minute level here. We had a valid 30-minute level. Price was bearish. Look, moved down. We had 2-leg move up and we had a continuation down. We had a bit of a pullback. I'm expecting a move down, right? Probably even further than this. It didn't go further than this, but at least a decent move down to back to this support level that we have down here, right? I have my setup. We have leg 1, leg 2, peak of volume on that candle. And then I have my stop above this high. I get tapped out. Look at the 30-minute where I entered. 30-minute was still strong there. What could I have done differently? Okay, well, these last two candles were super bullish. Yeah, my setup's appearing, but maybe I just need to wait for a little bit more confirmation because the 30-minute candles are still looking super bullish. Let's wait to see. If we have a look here, price faked the level, came back down. You would have noticed the 30-minute candle opened here, came up, created this wick, and came back down with a strong wick. If you have a look at my next trade, it's the exact same trade, except I realized this and was like, oh, now the 30-minute is actually looking bearish. We've got confirmation, massive wick to the upside. We've actually still validated this level. We don't have any bodies of the candles closing above this level. I'm going to take a short. Look at this beautiful short that I took because I was flexible. Okay, so let's look at this next trade that we have here. So I went long at this level. It was a valid level, okay? 30-minute level, bottom of the range, large range, but this one broke the high. So I saw this as a very strong level. We had confirmation on the 30-minute candle. We had a very, shooting star bullish candle here. And that's why I entered here because I had all the confirmations based on my strategy. If you have a look, we had a move down in the 5-minute, we had a peak, and we held above the 50% level of this level. So I had, again, all confirmations. We had one leg, two leg down to here. We started to really see buyers start to sort of try and take control here. But, if I zoom out and I go, okay, well, you know what? We're kind of in a downtrend here. All right. Yes, we could recover here, but what's something that I noticed when I zoomed out, I was like, okay, yeah, we're in a bit of a bearish move, but that doesn't necessarily mean that we can't catch a small move to the upside. What else should I have been able to see here that could have made me be a little bit more cautious with this trade? One thing that I noticed was this zone here got tapped 1, 2, 3, 4 times, 5 times. And as we tapped here on the 30-minute and had a bit of a bullish spike, we then reclaimed it. And honestly, this should have been a warning, hey, get out early. Or simply don't take the trade because that's a lot of times that this, has been tapped and we haven't really broke the macro level. So what I mean by that is we've tapped this level multiple times and we haven't been able to break above the high that we see here. We haven't been able to do that off this level and we've tapped it multiple times now. So to me, I'm like, okay, well, maybe this level is actually weakening and we may break to the downside. That could have been something that I could have analyzed and seen. And all of this to me is in hindsight right now. And all I'm trying to work out for myself is how can I see this prior? Because at the end of the day, I could have seen that prior. I could have seen those taps prior. I could have seen a lot of these things prior if I knew what to look for. And if I was looking for it is probably a more important thing to say. If I was looking for it. At the moment, I'm struggling because I want to follow my strategy and make sure I'm being disciplined there. And I'm so focused on that I'm missing everything else. And it's a really hard balance. And I think it's easy for me to go, let's focus on this because that's what suits the human psychology. It's like, okay, well, if I just focus on this, it should all be okay. And you want that predictability. The markets aren't predictable. They aren't structured as much as us as humans would like it to be. So we need to be as flexible as the market is, right? And I think that's why trading is so hard because we have to be flexible with our strategy. I can still take trades based on my strategy. I've just got to work out how to do that and be flexible at the same time. This trade is a really good example of this, okay? So I took a loss on this trade. Now, if we have a look, we've just broken out of this sort of range here. We broke up above and now we're kind of retesting it. So to me, this is a strong level, right? I've got the level marked up. 30-minute level is a valid level. So that's all ticked off in terms of my checklist. When it comes down to my level, how does price react? As we come down, we can see here that volume peaked on this candle, right? That normally would be a signal for me to enter, but I was waiting for buyers to step in. And as you can see, as buyers stepped in my buy order, had my stop below the low and targeted the high that I normally would have targeted. Okay. That was the trade. However, I could have looked at this trade and go, okay, hang on. We had that absorption happen here. We had buyers step in, but it got reclaimed. Maybe I should wait a little bit longer. Maybe we don't have enough liquidity for this move because we've reclaimed it even after buyers stepped in. Could I have been more patient? Because I'm starting to notice that oil loves to fake the level. To me, I was looking at this like tiny fake. I don't know if you guys can see that tiny fake on these 5-minute candles. I was like, okay, well, it faked the level. Let's, enter. But realizing that, okay, there's a 5-minute level just down here. As we peaked a volume here and got some absorption and buyers step in, we reclaimed that, okay, it's showing that maybe we don't have enough liquidity here. So maybe I need to wait for another peak of volume and a bit more of absorption. If I had waited, right, for that peak to happen, which happened right as it faked the level here, we had another peak of volume, okay? And on that candle, as you can see, it took the low as well, just here, just very slightly. We wait to confirm that it was a fake out. So what I mean by that is, as you can see, this big candle comes up here. And as you can even see up here, the 30-minute closes above the 50% level, kind of confirming this bit of fake out of this zone, right? If you could see here, if I waited for this price action to occur, we had a peak of volume on this green candle. I could have then waited for buyers to step in. I probably would have stepped in about here on this candle and the stop below the original place that my stop would be, below the low, and targeted the highs. As you can see, the trade would have worked out. But what I didn't do is I wasn't being flexible. I wasn't reading the chart for what it was right in front of me as it is. Instead, I was reading the chart based on my strategy. I wasn't flexible enough to see anything else. I was too focused, too honed in, that I'm not considering all variables. It's hard. It's hard to do that. And I'm struggling to do that. And I don't really know an answer to how to fix that right now, other than more chart time, practicing my patience with my strategies, and continuously when things like this happen, kind of looking at the chart and going, but how could I have played this trade differently? And try and do that over and over and over again until it starts to work and I start to see it prior to the trade actually happening, and then being able to maximize on the trade that I actually see based on my strategy, which again, it was there. There's just a few things missing. That peripheral vision of what is the market actually doing right now? What's the sentiment right now? What could possibly happen? Where is the liquidity right now? All of these things I need to consider. And I hope somebody sees something in this and learns something in this. If not, at least it updates you on where I'm at and where my head's at. And if you guys want to try out TradeZella for yourself, as you can see, I absolutely love this trading software. It saves me so much time, and I wouldn't recommend anything on this channel if I didn't believe that it has validity and value within it. So if you want to try it out, click the link below, use the code novice20 to get 20% off. Otherwise, I'll see you guys in the next video. Thanks. Bye.